Trump tariffs. China appeals for calm, readies economic resilience plans. China has warned against a panic in the face of Donald Trump's tariff hikes, saying it has plenty of policy room to defend the economy but without ruling out negotiations with the US. The sky won't fall even though the US abuse of tariffs will cause some impact on us, the official People's Daily said in a front page editorial on Monday. We must turn pressure into motivation. China is honing a domestic message of resilience after retaliating against Trump's sweeping tariff announcements last week by imposing levies on US goods. With no compromise in sight, the unsinged article in the Communist Party's mouthpiece publication laid out plans to counter the economic fallout by supporting domestic demand with stimulus measures such as lower interest rates. The dimming prospect of a deal between the world's two biggest economies has prompted a sell-off in financial markets and raised speculation among investors that China might resort to aggressively devaluing the yuan against the dollar. The Hong Seng China Enterprises Index, which tracks Chinese shares listed in Hong Kong, plunged 10.8% and was set for the worst day since the global financial crisis. The yield on China's 10-year government bonds dropped 8 basis points to 1.63%. The on-share yuan weakened 0.4% even as the People's Bank of China set the Chinese currency's daily reference rate at a level that was much stronger than expected. Under plans outlined in the People's Daily, which is frequently used to express official policy views, China appears more committed to making bolstering domestic demand its long-term strategy and to turn consumption into a major driver and ballast for economic growth. The government will look to boost consumer spending with extraordinary strength, cut rates and pump more long-term liquidity into the banking system whenever needed. It also has room to raise the fiscal deficit and sell more bonds to expand public spending, according to the article. The commentary followed the tit-for-tat countermeasures announced Friday by President Xi Jinping's government in response to Trump's so-called reciprocal tariffs on China, including a 34% tariffs on all imports from the US and restrictions on some rare earth exports. A potential window for major policy adjustments in China might open in late April when the Communist Party's decision-making body, Politburo, will convene to review the economy. Chinese officials will also have the chance of holding their first in-person talks with the Trump team when they travel to Washington later this month for the annual International Monetary Fund and World Bank meetings. Key economic indicators for the first quarter are due before the Politburo conclave. Most analysts anticipate growth likely held up thanks to front loading of exports and recovering consumption, while investment improved because of previous support introduced by the government. The official Xinhua news agency said on Saturday that Beijing will continue to take resolute measures to safeguard its sovereignty, security and other interests. US tariffs announced last week will raise levies on nearly all Chinese products to at least 54%, potentially crippling exports to the US. The article in the People's Daily suggested a range of other possible measures. Concrete and effective policy steps will be taken to firmly stabilize the capital market and restore market confidence, with relevant contingency actions to be rolled out in succession, it said. In addition, governments at all levels will assist industries and businesses severely hurt by the standoff, according to the article. Authorities will support companies in adjusting their business strategies and guide them to expand into domestic and non-American markets while striving to maintain trade with the US as much as possible. The commentary acknowledged the tariff impact, saying that the new 34% levy, together with the previously imposed US tariffs, will significantly suppress bilateral trade. China's exports are set to face a blowback in the short term, creating more downward pressure on the economy, it said. The Chinese language article indicated, however, that the US may be hurt more by the trade war because it relies heavily on China for a wide range of consumer goods as well as intermediate products. Shipments to the US have declined and account for less than 15% of China's total exports from more than 19% in 2018. According to the People's Daily, it said there is a huge potential for the economic and trade cooperation with emerging markets. It also made clear that trade showdown didn't come as a surprise, and Chinese leadership had already mapped out plans for how to respond. China has been engaged in a trade war with the US for 8 years and has accumulated extensive experience in the fighting, it added. Invoking Xi's previous comparison of the Chinese economy with a vast sea, it vowed to resist the invasion of trade cold waves and eventually let the world see the composure and determination of the sea that embraces all rivers. Thank you for listening. Thank you for watching. Thank you everyone. Bye.